Welcome to the Public Housing Repositioning Post-Closing How-To video series. The goal of this video series is to help explain and discuss common issues that occur post-closing after repositioning public housing assets to voucher assistance. Each video provides quick guidance to public housing agencies, PHAs, that are new to or unfamiliar with Rental Assistance Demonstration, RAD, and/or Project-Based Voucher, PBV, program requirements. The videos will help PHAs better understand their asset management and reporting responsibilities post-repositioning. The videos provide information to PHAs that have converted their assistance from public housing to voucher assistance as part of repositioning. This video will provide general guidance to PHAs on how to allocate and report costs and maintain records after converting a property from the public housing program to Section 8 voucher assistance. Disclaimer: the guidance provided through this video does not serve as a substitute for statutes, regulations, or HUD guidance, for example notices and handbooks, or describe how to allocate items on financial statements. PHAs are encouraged to consult their legal and accounting professionals on specific cost allocation scenarios and questions related to their properties. Timing of program change from public housing to PBV. The RAD conversion is considered complete when three important events occur, including 1. Declaration of trust is released. 2. Project units have been removed from the PHA's public housing inventory in IMS PIC. 3. And the PBV RAD-HAP contract is executed. When a PHA converts a project from public housing to PBV, different financial reporting requirements apply in the financial assessment subsystem. In public housing, PHAs submit financial data schedules and supplemental data collection forms under the financial assessment subsystem for public housing agencies. In the RAD PBV, different reporting is required depending on how the conversion was financed. For example, if the RAD conversion was financed with a HUD 221D4 loan, FAS-MF filings are required. See 24 CFR Part 5, Subpart 8, Section 5.801. Refer to Chapter 3 of the HUD Consolidated Audit Guide for more information on RAD PBV reporting requirements. The roles of PHA entities. There are three important roles to consider after a RAD conversion. Ownership entity. The owner of the covered project that underwent the RAD conversion, the ownership entity, is often the PHA or a wholly owned affiliate or single asset entity that is related to the PHA. Owners can also be third-party independent entities, such as nonprofits or tax credit limited partnerships. HCV staff. Employees of the Housing Authority that work on the HCV program, including PBV. Public housing staff, if applicable, employees of the Housing Authority that work in managing the PHA's public housing program or managing the public housing development. This is applicable to PHAs that own and operate public housing post-RAD conversion of a properties. Examples of these roles include, but are not limited to, maintenance staff, resident services coordinator, occupancy specialist, property manager, etc. Ownership entity tip. For projects where the PHA holds more than 50% of the ownership interests, the use of an independent entity is required by statute and is intended to assure that certain required functions are performed in an unbiased manner. An independent entity is an entity that is not connected with the PHA legally, financially, or in any other manner that could cause either party to improperly influence the other. Watch the Do You Need an Independent Entity video in this series for more information. Financial reporting post-conversion. The determination of the correct financial reporting requirements is unique to each conversion. It is recommended that the PHA involve their auditor when determining and applying the financial reporting requirements. When the RAD-HAP contract is executed, the PHA will report operating and capital fund revenue for the project in the Revenue and Expense Summary in the Public Housing Program for the entire calendar year. Operating and capital fund revenue received for the project after issuance of the HAP contract in the initial calendar year of conversion will then be transferred or expensed to the appropriate new program or third-party entity. See the FDS reporting requirements for projects converting under RAD in Accounting Brief Number 22. General requirements for a project's operations are described in RAD Conversion Commitment, RCC, paragraph 19.c. The project owner shall not be entitled to withdraw or take any distributions from the covered project until after completion of the work and certification of the actual cost of the work. This includes developer fees. The initial RAD-HAP contract, Part 2, obligates the project owner to operate the property according to HUD rules and regulations, including but not limited to financial requirements for owners of RAD-converted projects are contained in HUD's Uniform Financial Reporting Standards, 24 CFR, Part 5, Subpart H. RAD Project Financials. Principles to keep in mind. Remember these key principles after RAD conversion. Show only the revenues, expenses, assets, and liabilities related to the individual property. PHAs must not use public housing funds or staff paid from public housing funds for building management of the RAD projects. All necessary and reasonable operating expenses are paid from the project's operating account. One of these expenses is the management fee, paid monthly to the management agent, which may be the PHA. Expenses can either be project costs paid by the project's operating account or overhead management costs covered by the monthly management fee. If the PHA is allocating administrative costs to the program, the PHA should have an approved cost allocation plan that is in accordance with the requirements at 2 CFR Part 200. Examples of costs paid by the project's operating account versus costs paid by the management fee. After converting to RAD, it is important to remember which funds can be used to cover expenses. Operating account is used to pay costs of frontline RAD project operations, for example, legal and auditing expenses, bookkeeping and associated expenses, postage, retirement, and health plans for on-site staff. Travel expenses related to staff's project-specific responsibilities, for example, making bank deposits, meeting with contractors, attending training. Cost of phone lines, internet costs to meet the RAD project's requirements by HUD, and other reasonable costs for on-site equipment, software, technical support, etc. Recruiting costs for on-site staff. Management fee is used to cover costs such as overhead expenses for the management agent, for example, supplies, equipment, office space. Management agent travel expenses to meet with owners. Management agent office phone lines, internet costs that are not related to the RAD project. Recruiting costs for the management agent's staff. Complexities. Though the principles of cost allocation seem straightforward, complexities exist. Examples of scenarios when cost allocation can be complex include the following. PHA acts as a management agent for more than one project. Partial conversion of public housing projects and/or staff working in multiple roles, RAD projects, public housing projects, and office management functions. It is a best practice to use a timesheet to track employee time on various work activities to ensure there is a clear audit trail to prove that staff paid with respective funds performed the duties consistent with the work. Case studies. We will now look at two different case studies to put the cost allocation principles to work. Scenario 1. A recently converted RAD property unexpectedly needs to replace the air conditioning system. This capital cost was not in the CNA during conversion. What funding options are available to the PHA for the replacement of these systems? The answer is both funding options could be used. Generally, the expense would be considered a capital expense that would be paid out of funds from the replacement reserve. Keep in mind, when funds from the replacement reserve are used, the ownership entity should consider increasing the replacement reserve deposits in order to replenish any funds used for this capital cost. Depending on the financing of the RAD conversion, operating funds may also be used if replacement reserve funds are insufficient. For more information on replacement reserves, see the video in this series on replacement reserve management. Remember, the PHA may not use public housing funds for this expense since the building is not part of the public housing program. Scenario 2. A PHA has a large building that just converted to Section 8 assistance through RAD. There were 3 maintenance employees working at the building who the PHA plans to maintain following RAD conversion. What are the PHA's options? Option 1. Transfer the employees to the new RAD property ownership entity of the building and pay them through the project revenue, or Option 2. Or another way to do this would be to establish a contract between the RAD property ownership entity and the PHA for building maintenance, or include this obligation in the management agreement. The RAD property will pay a fee to the PHA, and the PHA will fund the maintenance employees through this fee. Remember, your local procurement requirements must be followed. It is important to remember that PHAs may not use public housing operating funds to continue paying the maintenance staff, since the building is not part of the public housing program. Reminders. Project owners should keep in mind the following principles when operating and keeping financial records for your RAD conversions. It is the owner entity responsibility to manage the annual project budget. The PHA board will need to review and approve the annual budget in order to meet their requirements under the RAD notice and HAP contract to assess financial sustainability. HUD relies on the ownership and management of each property to clearly demonstrate that all property revenue is being solely used for the benefit of the individual property. The owner and/or management agent should properly expense and allocate costs in a clear and easily understandable manner for HUD review. Questions. If you have questions or need additional assistance on this topic, please feel free to contact your local HUD field office or email rad.pbv.requests@hud.gov.